From engineering to sales, from venture to shore capital partners, Cyrus Hessabi has lived every chapter of the operator-investor journey. He architected an AI-enabled roll-up strategy at OpenOcean and now channels that builder's mindset into the traditional economy where tech adoption, culture, and process collide. Cyrus, great to have you, and thanks a lot for coming to the Holdco Builders.
Thanks. Thank you so much for having me, Nick. Very excited to be here and answer some of your questions.
You've operated at the intersection of VC, AI, and now microcap private equity at Shore Capital Partners. You've done a lot. Where did it all start? Let's start from there.
Yeah, that sounds good. I mean, I can go as far back as you'd like, but I'd say kind of my profile has a mixture of lots of things and their opposites in some ways. I was an engineer by training, aerospace engineer. And then I worked in a sales organization at Salesforce. You know, engineering is a very kind of traditional, stereotypically slow-moving environment. And of course, Salesforce was kind of software and tech and the pioneer of the SaaS business model as well. Thereafter, there was the business school chapter, and that was basically the transition into more of an investing type of role for me. I spent some time in venture capital. More traditional venture at first, at the first fund I worked at, and then OpenOcean, as you mentioned, was a bit of a hybrid where it's indeed kind of a venture fund, but the strategy was very much a bridge between what one might call small or micro cap PE, maybe even ETA, and of course venture. So happy to go into all of this.
Yeah, let's start from the OpenOcean. Let's start from the beginning. How did it all got started, and from which point you started building out this like roll-up structure?
Yeah, of course, absolutely. So it started in my head before, like I was thinking about this before OpenOcean per se. I mean, I think to be honest, the idea of software or technology for the traditional economy, the idea of bridging, has been something that I've thought about for a long time. Honestly, as far back as my first job, I was thinking, why is it that, I'm learning about building aircraft? It's one of the most magnificent feats of engineering. But then you go into, major aerospace manufacturers, and it seems like workflows are very clunky, sometimes Post-its and paper and pen based. And why is it that this whole chunk of the economy is just working differently to what I might expect from my humble view as a young worker. So it traces back all the way to that, to be honest. And then in my first year in VC, one thing that came across to me was that it seems like there is some sort of like drift from the core mission of venture investing, which is backing new businesses that have a right to win vis-a-vis incumbents. And so I started thinking, actually, there's a huge piece of the economy, the majority of the economy, in fact, that is completely untouched or hasn't benefited that much from any advance in technology. A mixture of, culture, demographics, adoption, maybe structural barriers to entry, regulatory barriers to entry. We can discuss all of these things. But then I realized, maybe my time is best spent thinking, how do we modernize? How do we reinvent some of these industries that have been kind of operating in the same way for decades, if not centuries, especially given that there is now this kind of, if I may say, AI revolution, which provides an opportunity to rethink how some of these workflows are done. I think that was the base of it. And to the point on venture, because some people say, is this a venture business or not? I think it's a spectrum. And I think one side of the spectrum is a fit with venture. And I would say that side, the question that we can ask, and I'm happy to discuss, is around how much transformation are you bringing to the industry? Is this rethinking the base benchmarks about how much it costs to deliver a certain service, or what the steps are needed to get through a certain workflow? So yeah, that's kind of how it happened. And then the final thing I'd say is OpenOcean is a fund whose history is rooted in data infrastructure and data systems. The founders were at MySQL, which is a famous open source database business, and then MariaDB. And one thing that came to my mind as well is one of the biggest challenges with these AI rollups, and the case when they are rollups, I mean, I guess the challenge with any sort of AI system is its underlying data infrastructure, just speaking very high level in simple terms. I think it was a very good fit with OpenOcean because of that, that kind of angle focused on businesses whose right to win is driven in part by their underlying data assets and data infrastructure.
Cyrus, explain me bridging. You mentioned that a few times. What it means and how
bridging.
Yeah.
I mean, we can go into personal philosophy as well, but I feel like I'm kind of a bridge because my background spans so many different kind of worlds. I feel like my role over time has been to bridge a little bit, be the technical guy on the sales team or be someone with operating experience in investing, VC first. And now I'm working with Shore, which is a private equity firm. So I think as a result, I've kind of ended up thinking in ways that kind of involve taking, various pieces of various worlds and try to find out a world in between that can leverage the best of both. And I think the bridging here in this topic of AI enabled services is bridging the two key things I would say is one is the kind of comfort with J-curve returns profiles of VC. We're focused on tech and technological change and technological moats, right? And being on the bleeding edge of tech and how this can impact, future dollar value of the business or the workflow. And on the other hand, looking at PE in two ways. One, in the sense of looking at industries that have hitherto been completely outside of the VC purview, like a call center, a plumbing business, think about other labor intensive businesses that you would never imagine a venture capital investment committee discussing per se, as well as the cash flow discipline. So making sure at the end you're delivering a service. The service has to be high quality. It can't just be an approach whereby you are hacking in a garage, if I take a Silicon Valley stereotype, right? The business has to work and deliver outcomes from day one. And it has to deliver cash also from day one because you're going to borrow some money to fund your acquisitions and you will have debt. And therefore you will have to, reimburse that debt over time. So I think mixing those two, execution discipline with technological optimism and was a way to produce, not necessarily a new asset class, but a new way of thinking about the world and unlocking opportunities that were otherwise outside of both, both of the purviews across from one end to the other of private markets investing. Each could say to the other, oh, this is for you, not for me.
Hey, a quick pause from the podcast. If you love the kind of stories we talk about on Holdco Builders, be it someone building AI-enabled services, AI rollups, or just acquirers acquiring, operating, and companies, you will love today's sponsor, which is CapitalBat. And this is the place where you can participate. You will discover vetted searchers, real acquisition opportunities, and you can almost access deals you won't find anywhere else. And it's investing in the backbone of the economy, pretty much. If you believe in backing builders instead of maybe betting on startups, go check out capitalbat.com, register, start looking at deals. The smallest investment is $25,000. So far, they've done 8 acquisitions. So you will like it. Again, capitalbat.com. I'll put the link in the description as well. And now, back to the episode. Now, can you explain me the AI-enabled services? Because we have here very simple people buying and running manufacturing businesses, HVAC, home services, roofing. So AI-enabled services, it could mean something which many people don't know, number one. And number two, like, what were you doing at OpenOcean, like on day-to-day basis? Were some specific investments or acquisitions? You mentioned ETA, cover it all, please.
Absolutely. So let's start just with a simple definition of AI-enabled services. The meaning there is basically to say, here's your services business, a call center, an accountant, a legal house. I'm providing property management services. The service economy is 60-70% of GDP. It's basically all around us. Some services businesses are more desk-based. Some services businesses are, of course, more manual. Some services are more, quote, white collar or, quote, blue collar. Think about how you spend your day. Everyone's providing a service on the high street, basically, unless they're selling, a tool or something physical. The rest is service. AI-enabled services is to say, okay, now if we make the base assumption that there is a potential revolution going on with the democratization of AI, the drop in the marginal cost of compute, and so on. Maybe there's a way to rethink the way that people do their jobs. Maybe if I'm a service provider, maybe if I'm an accountant, more of my time is going to be spent on strategizing for my customer, less about like actually fighting the individual returns. What does that mean for the business? Maybe the business can now generate more money because the accountant can spend more time on value creating activities, reduce their burnout, because burnout is a huge issue in accounting, focus on more like direct customer interfacing work. So therefore improve customer satisfaction. I think there's ways, and this can be done through improving or changing the underlying cost structure, changing the underlying mode of operations of these types of businesses. And so the AI enabled services piece is less, I'm a services business and I've bought some software or like some AI enabled software, and now I'm an AI enabled service. It's more, I am starting the services business. If I just landed on Earth today and I thought from first principles, how do I deliver this business? And in my toolbox are a whole set of kind of AI enabled tools that I can now use to deliver the service better, then this is an AI enabled service. And I think the final way I'd put it to make it simple is basically flipping on its head the idea that there's two ways you can run this digital transformation process going on. Either I'm at Salesforce, I pick up the phone and I sell software to services businesses and I say, hey, I'm creating $1 million of value for you per year. I'll charge you $100K subscription fee, and now you use the software to improve your operations. That has been what's been going on for the past 25 years. Or I can say, no, I'm not going to go to Salesforce or build a software company and sell the software. I'm going to go to reinvent the services business itself myself. I'll go and build the accounting. If I'm so passionate about transforming accounting, I'm just going to go and build my own accounting services business, and I'll use AI to have much better output, much better service, both efficiency improvements and effectiveness improvements vis-a-vis my competition. And therefore, I will beat the suite of incumbents that exists because I will be enabled by a much better cost structure and a much better set of outcomes for my customers. I think that's how I would define it. And then what I was doing at OpenOcean, I'll give you the kind of high level view. I don't want to make my answer too long either. I was in an investing job. And so it took some time at the beginning to, get the thesis going as well. And I think the team at OpenOcean is one of the most open-minded, technical, and deep that, someone might ever come across in the venture landscape. So, a very unique group of people. And what we're doing as a team, and including myself, who was kind of leading the charge on this front, was thesis building, kind of understanding what is the realm of industries where we can spend time, what actually lends itself. And I think the way we thought about that was, what can AI do today? Can it repair a HVAC unit? Maybe not, but it can definitely summarize documents, automate calls, manage the customer interface. So we're thinking, what does AI do? What are the jobs where the labor does things that AI can do? And what is the dollar impact that it can be in terms of gross margin expansion, improved productivity? And then you start from that and then go into finding founders who were looking to build businesses in those realms. Now, some of them were rollups, some of them were not rollups. We can get into that too. But yeah, that was kind of the crux of it. And I'd say 80% of my year, of my time there was spent on either industry evaluation, deal evaluation, or of course, supporting our portfolio of companies that we backed in this space.
And industry-wise, which was if we can say, the hottest? Which was like, okay, you saw something, you saw some data, you were like, okay, this is very exciting, because I guess there are still some industries which are not that maybe open about it.
Agreed. I think, and I can get into that in more detail, I think there's two dynamics at play. I think there's definitely industries where lots of founders have gone into now, and I guess a year ago it was maybe not as active. But I think that such industries would be property management, and you've seen there's lots going on in Europe in various areas of property management, right? I think in IT MSPs, and because it's like IT support is a big space. I think accounting and tax, actually, I gave the example, but there's lots of activity going on there. Various insurance workflows and insurance services, from back office to brokerage to things like that. And maybe also to some extent legal is fairly active, like some areas of legal. I'd say these are kind of, if I have to give you a big five of where, if I did a word cloud of, the industries I heard about the most, it would probably be those five. I'd say to you, I think there is now opportunity in more niche services to some extent. I think the reason these five caught on so much is because they're big markets. So I can see how in a VC, investment committee, you can pitch a massive TAM, which I think goes with typical VC investments, versus some of the other niche markets that I have in mind could be smaller TAMs. No, I think I would summarize it. Honestly, there's only positives. I'm personally incredibly grateful that I had the chance to even work with that team and have that platform to do so. I think I can talk about my work now as well around ETA and backing searchers and incubating rollups more from a private equity standpoint, if I may say. But by all means, the time kind of spent on the venture angle of AI-enabled services has been exceptional.
Okay, and if we sum up your journey so far, number one, engineer, then sales, then VC, and now private equity, Shore Capital Partners.
Right. The engineering piece was my, you gave your background, but yes, correct. Yeah.
And what is your role now? And how have been the first weeks, months? What have you been doing? And what's the plan for the next, say, 6 to 9 months?
I work on a team at Shore that supports searchers. So people who are looking to acquire a business. There's two kinds of searchers that, I would work with. One is searchers looking to, go after a roll-up strategy, doing a buy and build strategy in various niche services sectors, typically businesses between 1 to 10 million of EBITDA in an, attractive, fragmented services sector with, ideally some supply demand bottlenecks, various demand drivers. We can get into how we kind of diligence these things, but that's kind of the high level. And of course, some traditional search as well, which doesn't necessarily have to be a roll up, but more kind of buying an attractive business and growing it through other means.
Hey, another quick pause from the podcast. AI is great, but every single business still needs a newsletter. And if you're running a company and you don't have time to do all that, you should maybe outsource this. And that's where today's sponsor comes in, Spacebar Studios. They write weekly, monthly newsletters. They do all the research. They put together all the content and they hit send. And the best part, they're masters at growing the list. And currently, they're running a very special offer where you will get 10,000 subscribers in the first 90 days or you don't pay. So if this is interesting, go and talk to David and Brandon. They are the founders of Spacebar Studios. Again, proud sponsor of this podcast. If you want to have a call with them, go to spacebarstudios.co/inquire and book a free call with them. Now, back to the episode. And now, as it's still pretty fresh role for you, what would you say those early, because you've seen so many different industries, there are not too many people with background like yourself, and you having this, many people have this gap in between of those different industries. You don't have it because you understand and you are this bridge. So my question to you, what advantages do you feel it gives you, all your previous background, now when it comes to backing those searchers who maybe want to acquire different businesses in this 1 to 10 million EBITDA range?
I think everything is a trade-off, right? There's some advantages and some disadvantages. So if we keep it on the advantages, I think the main advantage is probably won't realize it consciously every day, but it's probably just like a broader set of references that you can draw from when you think about how, how to execute on a great deal, or what are the different value creation areas when we're considering backing an opportunity and, looking through its growth avenues, looking through its transformation avenues, basically looking at a SWOT. If you look at a SWOT matrix, right? Strengths, weakness, opportunities, threat. I think it just helps you cover more points in that matrix overall. I think for a lot of the businesses that I'm looking at today, the AI risk is significant for some of them, right? And I think it helps to have had some experience thinking about, what exactly is the bridge from, narrative to reality. Either if someone is pitching an AI value creation plan, or if we're trying to assess the true threat that AI might pose. Like, for example, you look at a healthcare staffing business and you might think, ooh, AI is going to come tomorrow because AI is so good at matching people. But then you have other considerations, right? Like, do people really want to adopt it? Net of all things, does it integrate with kind of existing software suites and the difficulty around that? Or, how much data do you actually need to train this to have that proper matching? What are the consequences if your matching doesn't work? I mean, I'm kind of giving you an example on the fly here. My point is, it helps to have had like this sort of background for that situation, given its relevance, right? And then, for example, I think the other thing I'd say is I think a lot about sales and like how to build a winning sales organization, how to, like what drives people to buy. I think you generate your IRR every time one of the company's salespeople is in a room selling, right? That's literally how you generate your top line. So just thinking about that, but I think there's also, disadvantages, right? Because sometimes it means you're overcomplexifying, thinking about many things that might be too far out of scope, or, I think at some point depth triumphs over breadth on some things. So I think it's kind of a balanced thing, but I certainly like having that bridge background because I think it's defined me for so long now.
You mentioned this AI risk. I think it's interesting. Maybe we can go more specific because thanks to your experience, you see things which many other investors who back searches don't see. So what else? You mentioned one thing is the healthcare staffing industry. What else? What do you see? You look at different companies, different industries. You see like, okay, here is a big could be a red flag in the future.
Yeah, for sure. So you're thinking about where is the biggest AI risk in terms of job loss?
You have people coming to you with deals, some things under LOI, for example, and you immediately see that, okay, it's too risky, and you go back to your team saying, okay, guys, we should maybe skip this one and move forward because of X, Y, and Z. Maybe you can give some examples, or how do you view these opportunities?
But I'll tell you this, I don't know that many examples where we said no because of AI risk per se. AI is usually, I don't mean to be cheesy or kind of, setting a narrative, but I think in many cases, it's more a consideration and an opportunity set versus a risk per se. It's more, okay, this is what we should probably implement in this business to keep it competitive and even do better versus, okay, don't go there because kind of AI is going to replace everyone, unless you go into some specific businesses, but that have already underlying poor economics, right? I don't know. You look at a low margin call center, we might think, okay, labor's there's too much labor intensity, or some people have tried automating their call centers like Klarna, and then they have to bring back humans. So I have some, there's maybe these types of considerations, but more often than not, the AI piece, we're looking at some I was looking at some marketing automation services. I think there you have a lot of AI opportunity as well, right? Matchmaking, campaign generation, a Copilot for creativity. I think more often than not, it's can you easily leverage a solution that exists off the shelf and bring it to the business, much like in the past, PE firms might think, what's kind of the best ERP or the best CRM I should implement in my business. Here's kind of what is the best AI strategy I should bring in versus saying completely backing out of industry just because of that. That's just from my humble experience, my memory today. I'm sure there's industries that I'm missing in my examples.
What else when it comes to, it's interesting that you said that you see those opportunities which many maybe won't again, because based on your experience, has there been any deals or deals coming to you where you see immediately like, okay, this is it's like screaming how good of an opportunity it is if we implement AI in what they do on day-to-day basis, and that will be the value add.
That for sure. So I looked at a few definitely, right? And I think some of the, of course, the companies that we backed, right, in various industries, I think those were definitely kind of in that realm. I think there's other industries that I'm excited about from the AI perspective. I think you can see online there's quite a few businesses that have raised in the insurance space, insurance TPAs and back office. I think that's very interesting. I think the main reason those businesses would be interesting is because of two things. high share of labor as a total cost, right? And repetitive, therefore automatable work, and work that also fits what AI can reliably do today. So processing documents, summarizing documents, being able to parse information, being able to synthesize and find gaps in information in long streams of data. So I think, and typically those are jobs that I think also, I don't want to speak on behalf of everyone, but I think these are typically jobs that I think create burnout as well, right? Or work pieces where I guess people wish they didn't have to do the per se. So I think these are also opportunities where you can say, I'm going to make my employee base way more fulfilled. I'm going to be able to keep them focused on things that matter the most. And then we can use AI to automate the pieces that are of low cognitive load perhaps for them, or less fulfilling. I think that's kind of the main point here. I'm trying to find an example because I'm trying to find examples where like software changed the way that we work. How we as just everyone works, right? Like with every kind of new productivity tool or software tool, a whole piece of people's jobs changed, and then we focused on a higher value piece of that job, right? I think that applies to, when you start using software in a company, or when new technology comes for engineering design or whatever. Just think about how people used to do things 40 years ago and what you do now for a given job. It just, let's say we're recording this podcast, right? It took a few messages and now a video call on the laptop, right? But the podcast is still happening. It's not being replaced by AI per se. I think it's a similar example where the core value of the workflow is being kept, but the menial work around it is being removed over time.
And when you joined Shore Capital, did they give you their current portfolio companies? Hey, now we have this guy, Cyrus, joined us. He has this excellent background as you have. And now please go through the portfolio companies and please find opportunities where we can implement AI. Like, did you have to do a work like this as well, or it was all about those new opportunities, new companies, new searchers?
I think new for now. I think like many funds, we think a lot about AI and AI for the portfolio companies, right? If you see on Shore's website, and there's a lot said, and Shore is very famous, in fact, for having all these different centers of excellence and pods, right, that are kind of unique in bridging, actually, another theme for bridging between Fortune 500 and kind of accomplished large scale businesses and the management practices therein, connecting those with emerging rollups and rollup platforms of SME businesses in those industries. And I think in the same way, I think our approach with AI is going to be, thinking deeply, what is the bottoms up way to create operational value and improve companies, improve people's lives with that? Where can AI fit? Basically, much like we have these centers of excellence in other areas, other functional areas of a business.
Was there anything you had to unlearn when joining Shore?
I'm still kind of transitioning. So I think, yes, but I'm going to tell you what it is, but I think it was also already in my mind as I made the transition. But I'd say, I think in VC, the incentive structure is around optionality, around long-term vision, around, winning the deal right now and kind of, valuation is whatever. Like, I don't want to, I don't want to be too simplistic in my view, but I think it's true, right? Like, typically, the amount of really, really good assets or high quality companies to back isn't that high, especially vis-a-vis the volume of funds that exist in venture. So I think the unlearning bit is to go from that environment to an environment where there is almost the reverse. There aren't that many ETA investors. There's lots of high quality people to back, lots of high quality things. You have to kind of parse your time a little bit and be able to say yes, no, kind of fairly fast. And I think keep yourself accountable also. I think these are industries that are very bottoms up. Like when you buy a services business, when you're acquiring a kind of traditional economy business, it's real in a way from day one. It's not a J-curve type of investing. It's not kind of vision driven as much. The value has to be delivered in the very near term. You have to value the company properly. You have to be quite clear on exactly what is going to be creating value for the business versus not. So I think there isn't that much room for narrative versus execution. And I think the unlearning, if I may say, is kind of that. Although what I was going to say earlier with my caveat was kind of with the AI-enabled services thesis, it was already like that, because the last thing you want is to come in with a very top-down, simplistic view of the world. AI is going to do this, AI is going to do that. And then the day after you are invested in the business, you realize, wait a minute, there's structural barriers to actually implementing any AI into this business. And so now we're stuck with like a bad investment. So I think it was already kind of like that over the past year, but definitely if I had to give you a comparison, small cap PE to VC, it's really around that dynamic. There also is a hype around like, in VC, you have so many funds, deal information flows fast. Even people and perception are a huge deal. I think in VC, less so on this side of investing. Not necessarily better thing or worse thing. It's just, I think, different.
You can be sure that a lot of VCs will listen to this episode because of you. So, and thanks to the private equity guy account on X, I've had many people reaching out to me asking this question that how you go from VC to PE pretty much. So maybe you're in this exact position successfully just done it. So what would be some of the things which come to your mind when someone would ask this question for myself? Like, oh, I'm in a VC, I made those investments, I really enjoy what I do, but to be honest, those traditional niche businesses in a very specific industries, profitable, long history, more stable. That's what I would like to focus on the next phase on my career. What would you say to a person like this? So you maybe 6 months, a year ago.
I think, also, by the way, I'm putting massive caveats on what I'm saying because I'm a young man in my early career. Like, who am I to give lessons? I can just give kind of my one man's answer on this topic. But I think the biggest thing, people are always about like, oh, it's a financial engineering job, whatever. I think the by and large, the main thing is, in my view, operational understanding. Like, what drives a business? What makes a business work? Why is an industry structured the way it is? Why is the cost structure the way it is? How do I change it? And I think operational understanding also means people understanding. I think actually I don't want to digress too much. I want to answer your question directly, but I would say many times people that I hear about, I think we tend as people actually to put the people side of things to the side and focus on the rational, easy to framework things. AI as an engineering feat, or value creation frameworks, or like kind of top-down views of how to change businesses. A lot of it comes down to people, hiring the right sales manager who attracts the right salespeople, creating the right incentives for the people you're hiring, putting in the right management team if the management team is leaving, making sure they work well with each other. Oh, damn it, the management who left, they had a really friendly relationship with their supplier. Now that they're gone, their supplier is going to jack up the prices. Profitability went down. So I think the thing I said outside of that people might hear less of is that I think in VC, you're very good at kind of saying, okay, this is where tech is going. This is what tech is going to change in the world. And I think it's super exciting to think that way. I think, however, you might think of it less about the operational day-to-day per se. For, in my view, two reasons. One is many of the businesses in the end converge to the similar model, right? You will see endless playbooks about how to build a SaaS business at every single stage. I can be a SaaS founder and I have, a lot of playbooks to go with. In PE and I think in ETA, businesses span many different industries, most of which I've never even heard of, didn't even know this existed. And they're driven by their own sense of incentives, their own sense of people. You have to map out the people and, who they rely upon. Sometimes they rely upon, like local blue collar workers that are in high demand and have lots of bargaining power. So yeah, I think my summary answer is, if you want to kind of go from VC to P, I think make a habit of building commercial acumen, I'd say, for how systems work, how businesses like operate, and how to get to the, answer of the key drivers quickly in that regard. The rest, in my view, flows from that.
Was there anything else you maybe misunderstood? One was the operational side. In the VC side, you look more about the vision and the J curve, as you mentioned. Now it's more about the operational side, people, cost, cash flow, things like this. Was there anything else? overall economy, maybe overall economy.
Yeah. Oh, right. I think also, I don't know that I misunderstood that per se. It's more, I think you need to have appetite for going and getting, smart or building a viewpoint on the market fairly quickly, basically. Because I think also because of the wealth of information that you have, and because oftentimes it's not like many people are looking at the same deal. In VC, you can text a few friends and everyone's seen the same company. You can kind of, build your viewpoint somewhat through a mixture of desk research and input from your friends. I think in these jobs, you have to build your viewpoint at the end as a team yourself, basically. So I think primary research is incredibly key here. You're buying a business that is, I don't know, a roll-up of optometrists, and you're trying to optimize work there, and you have a whole suite of ideas of what you could do. Just call them. Call optometrists and figure out how they work. Ask them the questions. I think primary research from the source is a key thing also to learn how to do it in these jobs, in my view.
But the overall research you're doing now, and maybe what is the right way to say in English, like affecting your viewpoint. What I'm trying to say is the information and content you consume now. Maybe previously it was like 20 VC, Harry Stebbings. Now you look more about those very traditional niche businesses. Maybe follow different operators on X. Maybe listening this podcast here. So how has this changed? Maybe if you go through Medina to have time, maybe reading different books, things like this. How has it changed?
Yeah, absolutely. Oh, sorry, my bad. Yeah, no, definitely like different books read. I think one of some good kind of day one books for whoever wants to look at this, and you will see the books go back to people. So the two books I have in mind are Will Thorndike's The Outliers. The Outsiders. My bad. The Outsiders. I keep confusing with Malcolm Gladwell's The Outliers. And then the second book, I forgot the name. It's Jeff Smart, and the book is called Who. Both of these books, as you can see, are people-based. What kind of information do you consume? I mean, there's still podcasts. You can listen to the Acquired podcast. You can listen to, there's a few ETA podcasts I was going to share. And I think most of my time is spent on industry when I'm on a live deal, and I'm on a live deal basically constantly. I think it's very industry specific, and you have to go deep. You have to go to conferences. You have to, at Troll we say like find the Mount Rushmore of people in an industry. Like who are the key people who could be amazing board members, who could be amazing experts, right? Guides to the operators of these businesses, and quickly help you get to the 80-20 answer on this space and what drives it.
Now, you mentioned people so many times. So you have this great experience of backing different people. One is the guys on the VC side. On the other hand, we have guys on a very traditional business side where companies are profitable. I've met both very different people oftentimes. Yeah. So what is your experience, and maybe some of the lessons you've learned from this type of two types of people, because you made those investment decisions by actually looking at those people, their beliefs, their maybe not habits, but how they view the industry, the future, and all that. So what's something maybe comes to mind?
Yeah, I think they're very different founders. I think the core traits of great leadership, I don't think they change that much, whatever you're doing, because the ambition of founders backed by VC is to build well-leading organizations, right? And whether you're leading a team of 10 or either a team of 10,000, I feel it's a similar set of base principles around trust, authenticity. I don't want to say authenticity in a cop-out way. I mean it in a way where you tell people things as they are, and you roll your decisions. I think the biggest difference is probably that I think it's detail. Devil's needed. I think when you are a VC-backed founder, I'm just thinking about this on the fly here, so maybe I'll have a better answer right after the podcast. But I think when you're a VC-backed founder, you're great if you're able to, through thick and thin, kind of keep the ships heading, right? It's kind of it's chaos. You're in the middle of the sea. There's high waves. You've lost a couple of your crew. two of your cells broke down. Just like picture the chaos. But you still have some like stars that you're following to get you to the new world in a way, right? And you're going to get there. I think that's kind of a VC-backed founder. Of course, many in the middle for X or Y reason, of course, they don't make it, but that's the whole game. And in fact, actually, to my example, as I say this, one of the earliest forms of venture capital was indeed, European royal families funding expedition ships going, leaving Europe, right? Or even going to the poles or going to other places. So I think that actually is a good example. So the the PE style investing founder, I think, is more, am I able to manage complex systems, put the right people in the right places to, be able to at the same time have a view, like impact and influence various areas of my ops, but at the same time trust that I have, a good management team also kind of on the ground. I think also you have to be super, your business is running right now. It's you have to generate cash every period. You have to pay back some debt. You have to, execute on fairly aggressive time-bound growth plans and margin expansion plans and whatnot. So you're kind of very on a clock. And a lot of the ways that you create value in these businesses is around, very detailed operational improvement, renegotiating contracts, launching new products, acquiring businesses that require deep diligence and then integrating them. And then integration oftentimes hinges on a few key people. So you have to manage a whole set of champions. I think it's more kind of meticulous day by day versus I think in the VC side, if I had to stereotype a little bit more, it's more just how good are you at maintaining your ship together in a very chaotic and uncertain environment. And argue it's probably harder to be a VC-backed founder than a PE-backed management team.
And now yourself, you have this experience in working in a top firm, and now as well you're working in a top firm in a PE industry. Previously, it was in a VC industry. At the same time, you're super humble, saying that you're this young guy in the early stages of your career. So, question for you: like, what have you learned and maybe implemented yourself? Number one, from meeting the partners and the founders of those firms. Number one, and number two, all those entrepreneurs, operators, people wanting to build those VC firms, people who you're going to or already have backed when it comes to those traditional businesses. So personal, really personal. What have you learned, and what do you implement on your own journey when creating value and making hopefully good decisions?
Just to clarify your question, you were saying learning from who? Sorry.
Like the people you've met, all the entrepreneurs, because these are people who's solving like very hard problems. They're trying to. Sometimes they need additional capital for that. Sometimes they don't, because the company is profitable. So the lessons from this type of people and the founders of, for example, the previous firm you were working.
So many people, so many different lessons. So where do I start? First is, I think honestly the biggest of all of this is, and you can't do everything all at once, and that you have to be very deliberate and assertive, even in the face of your VC board or whoever is kind of pressing you to go left and right. I think you have so many concurrent priorities at once. I think one of the things I'm learning a lot as I assess new people is ability to be very clear on the net type of decision making, where they're allocating their capital. Building an AI-enabled roll-up. Right now, we're not doing any AI. We're going to do just roll-ups because I know we have to acquire customers. And I don't care what others are saying. That's what's happening. Or the reverse. I think I respect that a lot. And I think it's the right call because especially with these AI roll-ups, it's hard to have more to parallel process a ton at the same time. And you'd rather get things right kind of step by step versus an everything everywhere all at once strategy. I think that's one. I think the second thing I've learned a lot is around, is confirming my instincts around just saying things as they are. And I think there's a lot of temptation to come up with narratives for everything. Company is doing great. We still have the downsides. Or, trust me, the AI really is creating that much value, but like actually it's not. Or you can come up with so many examples of narratives everywhere. And I think narratives are good. Storytelling is great. I think, however, some of the best people I've worked with, some of the best, whatever their jobs is they've been very kind of clear on this is what I don't know. This is what I know. This is what I'm confident on, what I'm not confident on. These are the 5 risks in my view. And I'm aligned with you because you're investing your money. I'm investing my time. It's probably even more valuable. People who've taught me a lot of lessons in that regard. And I think the third thing I'd say is coming up with some sort of internal framework to be able to read people and people-driven situations. Who's gonna be here for the long term? What are people's motives? Why are they here? What are they trying to do here? I think that's helpful. I think if you're a founder, because you're trying to hire people, and to my point on the ship being in the middle of the store, you need people who can kind of take care of various areas without you being kind of everywhere. Yeah. I think it's probably around those things.
And now coming back to today, what companies, what industries you are most excited about today? Right after finishing this meeting, things you're working on, what are you most excited about?
I mean, I'll tell you this. I think there's I could list so many sub-industries, like a laundry list doesn't necessarily add value. And I think also the laundry list is going to be full of these niche names now, niche sectors that I think not necessarily kind of more like abstract. I think I'll tell you directionally what I like. I think I continue to be very excited about spaces that are just, out of the beaten path in a way, that are not intuitive, and that you need to, there's some sort of barrier to entry in terms of interest and research to get to them. I think services industries that are continuously facing supply demand bottlenecks, kind of to Shore's point, but I think that's, something I share, with a highly localized right to win. It's much better if you're not competing with someone across from the, on the other side of the US, and you're competing with your own local competitors. And I think also with a high share of work that AI can now do. So I really care about kind of an AI approach as well. And where you could create a lot of value in doing so, because there isn't that many other people who are thinking about it, because just the kinds of people that are going into these industries are not, are still in a limited pool. And I think also really, really spending time on non-cyclical stuff. I think one thing I'm realizing is we live in a world increasingly that is very, very volatile. You might say in the course of history it's normal, but we rather left a normal period to go back to normal. But anyway, I think with that in mind, it's very hard in a way also to make business, to back stories that are for 10 years from now. I don't know what's happening next week. How can I make a bet on 10 years? So businesses that are kind of, I think one thing that drives a lot of my investment thesis, and it's funny, I've waited until the 55th minute of this podcast to say that, but I think I wrote this piece on my Substack called Investing in What Does It Change? And I think that is the crux of my investment thesis personally, is we always talk at VC, we love to talk about what's going to change. This is what's changing. This is what's happening. This is how the world's going. Impact of XYZ. I think for the most part, actually, the word doesn't change. I think people are driven by the same things they are today as they were in Egypt 5,000 years ago, or in Roman Empire 2,000 years ago, whatever. I think because the species doing it are the same, i.e. humans, the drivers and the incentives are basically the same. And so I think the industries around the societies that we built are also fairly the same. And I think as a result, especially now with this convergence of so many things at once, AI, geopolitical changes, demographic changes, you name it, climate change, you just add so many things that are shifting at once that are fairly structural to how we will live and work. I think the best things, in my view, that I like to spend time on are things that don't change. Industries that we always need. We always need to be insured. We always need to fix things. We always need to have a house. The house always needs to be repaired. We always need to file taxes and accounting. I can go on, but I think if it doesn't change over time, fantastic. That's what I like personally. And by the way, one more thing. And by the way, to bring it back to AI-enabled services, the crux of what I like about AI-enabled services is to leverage the positive change brought by AI to further cement something that doesn't change. Maybe I'm going to say something a bit controversial, but if you're backing like an AI agent business, you're betting on the change itself, that people adopt your AI agent business, right? AI agent for debt recovery. I don't know. I don't want to name any names. But if you're backing the service isn't going to change. We need it. But the AI is just is the change that whichever form it takes you're benefiting from it because you're on the side of the equation that stays the same. Is that making sense?
Yeah, it makes sense. It makes sense.
I think that is the crux of why I've been so excited about AI for the traditional economy, because the traditional economy doesn't change, in my view, for the most part.
Okay, Cyrus, really, we went to all sorts of different places, sometimes because I don't maybe understand all those things so well. But thanks a lot for doing this. Last question. What is your favorite book? You've seen a lot, you do a lot, different industries, different things you've done. What is something you really enjoy reading?
Wow, my favorite book. I haven't even been thinking about this for a while. I mean, so many different categories. I think one book that I really like is, this is going to be a bit philosophical, but there's a French author from a few centuries ago, Voltaire, who wrote a book called Candid, like the word candid. And it's, in one sentence, is the story of a naive person that goes from happy in a world where they know nothing to fairly sad in a world where they know everything. So it's kind of like, do you want to be ignorant and happy, or all-knowing and sad? And I've always thought about that question. I think I land on all-knowing and sad if we have to make a choice. But I think it's interesting because it's the journey you always take from the beginning of an investment. You're very much like, oh, this is amazing, I love this, and everything is kind of rosy and green flag. And over time, you realize so many of your beliefs are actually shattered by confrontation with reality, but it's still worth it because that's kind of what makes your life, I guess, in a way worth living, in my view.
Okay, great suggestion. Again, thanks a lot for doing this. Let's wrap up here. Thank you for your time, and talk to you soon.
Yeah, my absolute pleasure. Thank you, Mick. Pleasure and honor to be here.